Saurabh, good morning and great to have you on the show. Obviously, now we're going to be waiting for the final numbers come tomorrow, but the indication of the poll of polls and how will you read into that in context of the bigger election?
I think if you ask me, today's correction is as much about geopolitics as it is about the exit polls. And I think that point of view, I think, will sustain over the next 4 or 5 months. Whilst there is plenty of political drama at home, my reckoning is the combination of what's happening in China, what's happening vis-a-vis the Huawei CFO, what's happening with the FBI's investigation into Trump and the oil price. I think there's more than enough geopolitical drama which will roil our markets. So yes, the domestic elections are very interesting, but I've long said that I don't believe the Indian political scenario has any fundamental bearing on the Indian economy. It hasn't had in the past, it won't have now. Yes, it will create some market perturbation, some market turbulence, but the overall macro setup is such that if the markets do pull back to, if the Nifty pulls back to 9,500, I do think it presents a buying opportunity. I for one certainly will be looking out for that. I think the combination of global geopolitical turbulence and domestic political uncertainty, there is a real possibility that the Nifty hits 9,500, at which point I think a buying opportunity presents itself.
Which you told us earlier on.
That's right.
That's an auto trigger for you.
Yeah, I wouldn't overplay the significance of elections from a fundamental economic perspective. I really don't believe there is any. Certainly can't find link between Indian macro and Indian politics over the last 20, 30 years of data.
But just from a sentiment point of view and the volatility point of view,
that's right.
That will rein in if at all the polls convert the actual result.
Absolutely. So the noise around elections, quite literally the noise around elections, could lead to some people selling the Indian market, and if they do so and the market pulls back to Nifty 9,500, I think we should consider buying.
But I think even global investors are watching closely, right? Because they are also, if BJP doesn't come in.
Again, I think what will happen is the mixed signals. So, see, the US market pulled back 3% on Friday. If that's the extent of pullback in the American market, it is but natural that emerging markets, including India, suffered through this week. But I'm not sure I'll attribute that to political outcomes. I'm not sure there's a massive constituency of FIIs who will sell the Indian market basis the identity of these elections or the general elections. Most people who've done emerging markets for 10, 20 years know that political cycles really have very little impact on as large a macroeconomy as India.
Sort of the investor within you, and the question is to that person, the person who's managing so much of money or advising so much of money, if indeed there is a drubbing for the BJP, would the BJP take it as the rural distress showing its signs and it having to do more than what it has already done in the way of MSP or otherwise? And is there therefore economic profligacy risk that Indian markets run?
Let me answer that in two parts. If you look at our budget deficits over the last 20-25 years, they follow a very predictable pattern. For 2 years after general elections, budget deficits fall. And in the 2 years running up to general elections, budget deficits rise. It's a very predictable pattern. It doesn't matter who's in charge. So I doubt that pattern will somehow change in the current dispensation, or indeed whoever comes to power. I think it's a very predictable political economic cycle that our budget deficit takes. Secondly, leaving aside whatever happens in the assembly election results, if you have food inflation at negative levels 4 or 5 months prior to the general election, any government would want to spend money on rural. Food inflation at negative territory 5 months before general election really is remarkable, and it will require attention on the government's part, regardless of how the assembly polls pan out.
That's an interesting point too, Saurabh. You made this point that the global markets are probably the bigger overhang. But the fact that even if there is a drubbing, and even if we enter a coalition government, it hasn't necessarily been bad. In fact, Prashant Jain the other day when he was with us pointed out that, just a statistic, that not a single financial year when the elections have been held has ended in negative returns for the market. So we make a lot of brouhaha, but from April to March of the financial year, there's not been a negative.
I think there's a reason for that, right? It's not as if Indian politics is divided on left versus right in traditional economics line. It's not as if our main political combines have some fundamental economic policies on which they disagree. If that was the case, you'd lose sleep as a stock market guy. But it's, from what I can see, it's half a dozen of the one and 6 of the other. So economics has never been at least for 20 years now, economics has not divided political parties. Let's hope that that continues, so that we as market participants don't have to fundamentally lose sleep on who's winning the election or is anybody winning the election or not. We carry on investing sensibly in high quality companies, and the economy chugs along at say around 7% real GDP terms. It would be great if the 7 was 9, but hey, that hasn't been the case for the last 20 years, and it would be foolhardy to presume it'll suddenly happen in the next 10 years just because somebody or the other wins the election.
So what would your strategy be as an approach to Lok Sabha elections?
So I think the strategy is same as we were discussing on your channel a month or so ago. I think the rupee looks likely to stay weak, perhaps weaken further to 75 odd. The IT companies have benefited so far. I think the IT companies continue benefiting from a weak currency. The pharma companies haven't yet benefited. I think there's a long overdue benefit coming to the pharma companies. Furthermore, as the early signs of a capex recovery kick in, well-funded banks which have good tier 1 levels in the private sector, I think stand to have a good couple of years ahead of them. I think those are the 3 pockets of opportunity. The FX-driven place, plus well-funded banks. I think the NBFC high water mark is long past us, and as NBFCs pull back over the next couple of years, the well-funded private sector banks will take over market share and benefit from that. So buy quality in these sectors and buy them regardless of what happens in the election. Honestly, it's just a lot of hoo-ha. It's great drama. I love the drama. It's great fun to watch programs like this. But as a stock market investor, I'm not going to lose sleep beyond a point.
Anything that you feel, irrespective of who comes into power, the electoral agenda for each of the parties and how they individually will impact specific sectors?
I think the one call which is hard to make is black money and real estate. It is clear that in the last 4 or 5 years, black money and real estate have receded somewhat. Will there be a comeback by real estate is a question that keeps popping up. To my mind, I don't think there will be. Residential real estate, I think, remains fundamentally overvalued in our country. And with the NBFCs and housing finance companies pulling back because of balance sheet challenges, I think there's a further correction in residential real estate due, which in turn suggests liquidity flows into the financial system, stock markets stay in reasonably good shape over the next couple of years. But if something happens in Indian politics, which brings black money back into the equation and residential real estate back into the equation, that could have a bearing on stock markets, because it is seen as the residential real estate is seen as an alternative conduit to invest beyond the stock market. Unknown at this juncture, no party is going to talk about it obviously, but I think that's the one thing to look out for if you really want to discern stock market trends from elections.
One final question on this, and again I'm just linking it back to the market. Saurabh, what happens tomorrow is a bit of an unknown entity. I know you mentioned that global markets will take center stage. My question to you is, assuming that the BJP doesn't emerge as the stronger victor tomorrow, and the global markets doing what they are doing, is there a higher probability of the markets drifting lower from the current 10,500, be it 9,500, be it 1,900, be it 10,000? Is that a higher probability?
Let's look at it this way. We haven't had double-digit earnings growth in India for 5 years now. We've got cost of money rising globally. Yes, I know a 10-year bond yields fell in India last week, but compared to 6.4% on the 10-year bond yield roughly a year ago, 7.5 is a significantly higher number. If you have cost of money rising and you've got a punchy PE on the stock market and you've got weak earnings growth of 5 consecutive years, you've got an overvalued stock market. I don't think anybody who's sensible about the Nifty should say that this is fair value. 9,500 to my mind is fair value on the Nifty. Is there a chance we drift towards it? I think there is a good chance we drift towards it. Will it be more due to global factors than local? I think global will play a bigger role than local. Will something radically change on that market scenario front at the elections? I doubt it. There are challenges around the social setup as Mr. Prasad is pointing out. But I think the challenges in the social setup will persist regardless of who comes to power. Across the world, job creation engines seem to have conked off. It's not just in our country, the same problem seems to have afflicted the West as well. And in our country, alongside the job creation having conked off, we haven't had a capex cycle in 8 years. There seems to be early signs of a recovery in the capex cycle, and I'm 100% sure, regardless of who wins, the capex cycle gradually kicks into life over the next 12 months, 18 months. So I know the politics is very emotive, and clearly as we go into April, May next year, it will get even more emotive. People like me are paid to keep a level-headed perspective about it, and my level-headed perspective is we're in reasonable economic shape, and if the market pulls back by around 10%, there's good reason to start buying.
And the key for that is obviously crude oil, which is keeping everything else in check as well.
So crude oil, it's impossible to make a second guess the crude oil piece, but what was noticeable was how quickly OPEC capitalized on the America-China standoff on Huawei and on the FBI's verdict on the Russia investigation, how quickly OPEC's capitalized to cut back production, pull back production and try to ramp the price up. So the global geopolitical setup is, I think, more tense than I've seen it in a good 20 years. It's very difficult to remember this sort of eyeball to eyeball between major economic powers in the last 20 years. We used to have this in the 80s when we were in school, but we are back to the Cold War, back to sort of spy thrillers. So if our elections are a local thriller, I think the global spy thriller is the one which will have a bigger fundamental effect on our economy.
Well, let's wait and watch how that pans out. Saurabh Mukherjee, thank you so much for being with us today and giving us the market perspective.